Well, hello members and welcome to TA Today's Cradle to Grave trading series where we take a look at stocks that we buy in the portfolio. We trade those stocks evolutionary throughout their life cycle and eventually close out those trades. As you know, the two that we have going on are gold and Alibaba. Those trades actually have been going on for quite a while, so let's pop in here and take a look at what they're doing. We're going to start here with gold. We'll start on the weekly time frame. The reason for the weekly is, if you look at it from the weekly, you can kind of see these, ranges that have kind of taken place, right, as gold has moved up. And you like to see stair-step moves like this, right? So you usually have a base and continued steps up. Now, what you notice in this is they've gotten smaller and smaller in terms of range. If you look at the arithmetic price, there's $12 here. From there to there is about 10. From there to there is about a little less than 10, actually. And that's not uncommon as you move up, right? Because things get tighter. The moves don't get as big. If you look at it percentage-wise, it's probably a little bit greater. But the point is that you've got a stair-stepping move up. The risk in this is that you could always get some sort of a point where one of these stair steps breaks. So in other words, you could pop down into here and all of a sudden you're back in a range, right? And anybody that's bought up here now is in a losing position. And that's not what you want to see. And if you think about it from a different perspective, you could see some sort of a top forming, right? Where you go up, up, and then eventually all these people get hung out to dry. That's potentially a risk. But you don't know that that's going to happen until it actually does, if it does. What you can do, though, is trade around that core position. In other words, we believe on a long term, if we bring the monthly chart over, we still believe here that this thing has eventually, it has arrested this decline, and now we probably have something going to the top side. We've gotten over some key areas that make us believe that. For example, if we look here on the monthly chart, we had a bearish retest regenerate here. We got over it. We held over it. That's an early warning system that this thing really is changing trend, and eventually it did change trend after that early warning system here. You could also look back. Here's another one that got broken to the upside. Now, if you think about it from a different perspective as you're coming down, right, bearish retest regen up here, never even tested it. You go to this one, right, and when it broke on this line right here, it did come back to retest, but quote-unquote regenerated to the downside. And so that regeneration continues to tell you that there's pressure to the downside. When you can't regenerate, which was the case we were just looking at, right, that tells you something's changing. Now, whether it's a long-term change on this time frame, we're expecting that, or not, you have to recognize that it's not down anymore, right? The whole point of a retest regen is to tell you that what used to be this way on the way down, right, probably is more like this at worst and maybe slowly going back the other way. And so that's kind of a background as to what's happening here. As we move up, we know that at some point, right, there's a good chance that what's going to happen is the stair-stepping moves that we've seen, right, we're going to see some sort of a fall. And we'll get a bigger retrace in these little stair-step ranges. If that happens, when that happens, you don't want to be strictly long, and you don't want to be averaging up your price, right, your cost, until your cost is up here. All of a sudden you break this and you're losing money. So that's what you have to guard against. You want your position size big, and we've been building this position, but we don't want it at an average cost that's going to hurt us. So going to the current situation, bringing this back down to a daily, you can see how we're all over the map. And if you look at it from this perspective, right, gold has been making a steady case for the most part. It looks like it's about to make one here of some sort of declining highs and declining lows. And this was the classical definition of a downtrend. Well, in this case, we're not really a downtrend yet. We're really a sideways trend, and you can see that, right? You get down, then you come back to sideways. You go sideways, you go down. And you can see that here, right? It is working its way down there, but it's not there yet. But what you can do when you have this range, this big range, and this is not a small one, we're doing for about 124 up to about 130 or so, you know, it's big enough to actually trade it. And trade it we did, you know, back in August when we saw that this was doing some sort of a topping out, we came in, we sold some, I believe it was right in this area, we sold some. And we took some profits on that position as a result. That's just preemptively managing a core position. We also took the opposite of this, which is GLL, and bought it, right, on some of these spikes because GLL moves to the inverse 2 to 1, and made some speculative profits on it while we continue to hold the core position. And as it's moved into these lows at times, we've actually bought some. For example, on this bar down, August 30th, right, we bought some. So there's ways to trade this, and as it spiked back up, you know, I was talking about that GLL, we actually sold, it was on this bar, September 6th. So, you know, we sold it basically buying the GLL. So anyway, the point is that you can trade around the position. We continue to trade around it. There's no reason to trade this any differently. When we get a spike back up towards the top, we'll probably look at the GLL and try to trade that to the short side. When we get back down here, we'll consider buying. We may even sell some of the GLD up here if we think that this is going to go lower. Right now, hasn't done anything wrong. And as long as it doesn't do anything wrong and it's in a range trade, we just trade around the range. Let's look at BABA. Now I'm going to start with the long-term view on BABA. And the reason for that is we picked this up right before it broke out here. And we've made a nice move. Volume has moved up, right, as this has moved up. And that high volume target, that magnet up there is where we're trying to get to, and that's 120. And so we know that this thing is going to go, but once you've made this kind of a move, I mean, essentially you've gone from, you know, 85 to almost 110. That's $15 on 85 if you do the math. That's a huge gain, you know, something like 17% in a couple of months. When you get that kind of a move, right, it's really about 6 weeks. When you get that kind of a move, you got to expect it's going to try to digest some of it. Right, we got exactly what we expected, multiple time frame breakouts, 2 to 3 bars. So we got bar 1 going on, right? Bar 2 may be sideways, may actually extend up here. But you know that there can be some digestion, and what you want to do is you want to look at this thing on a shorter term time frame and start finding places to trade that digestion. Now we actually had, and I'll go backwards here, we actually had a great trade on this just the last couple of days. This was a test of a high, right? That test of a high came right here at the 109 level. And if you were watching this intraday, you could see that the volumes here were not anywhere near, right, in terms of trying to break out, was not anywhere near what they were at the highs. That's a warning flag, and the fact that it tested, in other words, it got over, back under, lower volume. After an extended move up, this has had a big move up. You know, I wouldn't call it a 2-bar, but it's an over-under, and it's a reversal potential. You had the same sort of thing here, if you remember, right? Big volume, low volume, and what do? You get a fade. Well, you get the fade going on here. You come back up, you test, and then you get the big drop the next day. So what did we do? Well, fortunately, we sold at that top. We almost got the top. And then we bought back yesterday as it came back down, right? And we're going to try to flip some of that. We're just going to continue to trade this on the idea that we're probably setting up a range. Where could that range be? Well, when you're setting them up, you never know. And this, like we were just saying on the gold market, this is stair-stepping. And let's draw it in so we can kind of see it, right? You have a consolidation, spike up, right? Consolidation, spike up, right? Consolidation, and then another little spike up. But you can see how they're getting smaller and smaller. So we're probably going to see a range trade set up after this huge move up. The initial range would be this top area, and that's what it did. It came back, tested into that bottom, held. Probably going to go back up and try to test the top, sell some, right? Maybe it expands that range, and that's not what I meant to do. Maybe it expands that range. Actually, let's just get rid of this. What if the range expands to here? That's very possible, right? Or into the top of this bar first. That looks possible. So what you want to do is lighten up on the tops, buy even more as it comes back, right? And eventually, the idea is that you're going to have as much as possible as you shoot up towards that 120 magnet top. That's what we're doing. That's how we're trying to trade this. We're trying to put ourselves in a win-win situation. And if you think about what that means, and if I go back to this chart one more time, what that means is when you come to a place that a failure has occurred or looks like it's going to occur, what you do is you sell some, right? You sell some at that price point, and you put yourself in a win-win. What does that mean? That means if it pulls back, you get to buy it back cheaper. You win. It means if it breaks out and just keeps going, we know that the probabilities are fairly high that within 6 bars, it's going to come right back and do what? The retest, regen on that high. In this case, it wasn't really a swing point high, but you'll probably get a pullback anyway into that. And if that's the case, right, then you can win on the move down if it happens, or you can get back in where you got out. You set yourself up for possibility of doing better. And if you go back and look at the last time this happened, look at this high here. Had you sold that high and it just went higher, right, what happens? You eventually get the retrace. You can get back in about where you got off at worst. If you did the same thing here, right, and you sold this high, what happens there? You actually get the win. Comes back, you can buy it deeper. That's the idea. That's what we're doing. And that is the Cradle to Grave series. Thanks.